Hello, everybody. Welcome to the technical analysis webinar this evening. My name is Troy. I'll be leading the webinar. As we get started, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Thank you, John. You were first. All right, I've got enough responses. Looks like we're good to go. If anyone has any issues as we go along, double check on your side, your audio and that sort of thing. And if it persists, let me know. I'll check my side as well. But it looks like we're up and running good for now. Okay, so one huge driving story today, making the technicals so predictable. We'll go through it. We'll first look at the fundamental news quickly. I think we all know what it is, potential pandemic spreading around the world with this coronavirus. And then we'll look at the technicals and see how easy it's been all day long to pull profits off of a number of predictable assets that tend to be big movers when there's economic fear on the markets. So quickly, we'll go over our standard things at the beginning. As we all know, or if you don't, that's why I'm covering it. All investments have risk. I can't think of one type of investment that doesn't. So trading on Forex, spread betting, CFDs, options, they all entail risk. No one trade is guaranteed to profit. I think we all understand that. But quite obviously, there's also nice potential for profit, which is why we're all here, to try and get proper entry points, develop proper strategies so we can profit more than we lose in the long run. And you can see on the slide here, about a third of all traders or so with AvaTrade profit long term. And you might say, well, you mean 70% or so lose? Well, you have to understand a lot of people just get into things without really knowing what they're doing and just start trading and guessing. And the spreads and the swaps slowly, if you're just 50-50 up and down, slowly eat away your balance. And if you're using leverage, you can burn your account pretty quick if you're just kind of guessing on things and not using proper risk management. So as we move forward, risk management is something you should take into account. We can go over that idea as well as we look at the charts and the potential opportunities. One thing to keep in mind, what we cover is not meant to be financial advisement. It's coming from an educational perspective and certainly can be helpful with developing and adding to your trading strategies. As long as we're talking about risk, keep in mind we have a feature on our AvaGo app that allows you to manage risk in a unique way. It's called Ava Protect. If you're not using the AvaGo mobile app, download it on your mobile device. Check out the Ava Protect feature as you're setting up trades on any of the FX, gold, or silver. You can choose time periods for protection. Any losses during those time periods, whether you chose 6 hours or 1 day or 3 days, completely covered, added back to your account. And if you profit, then the profits are yours. It's just a flat premium cost. If we have time, we'll take a look at that on our website, but you can also talk to your account managers about that. It's unique to AvaTrade and specifically unique to the AvaGo app. But in general, I think it's pretty good that almost a third of all traders are profiting long term, because that's about how many take things seriously and really look to develop a professional strategy and go about things like a business. And so that tells me that a good proportion of those people really do have long-term success. And as a broker, AvaTrade is a hedging broker. We don't need people to lose to profit as a broker. It's not like the business model is to have clients lose and then AvaTrade wins. When trading is balanced, we match tickets, we profit on the spread. When trading is unbalanced, like right now, maybe all day, more people were buying on gold than selling. AvaTrade's not losing. We're hedging with outside liquidity providers going with the imbalance to eliminate risk as a broker. And obviously, with institutional size hedging positions that AvaTrade would take, would get a tighter spread than the retail traders. So it's a guaranteed profit on the spread either way for AvaTrade. And that's the way legitimate brokers operate, not hoping traders lose, because that incurs risk on the broker and doesn't really make sense. So we're happy if that third of all traders can become 50% of traders or 80% of traders that are profiting with us. That's what we want. And the more we have traders attending webinars like this, studying through, I don't know, other channels from our website, from third parties that sometimes offer help, it really helps in the long run with people to develop long-term successful strategies. Okay, with that said, we can take a look. Technical analysis, I think most of you understand the basics. If I'm going too fast for anybody, let me know. We're going to be on the live chart soon. We're going to be looking at strategies on the live movements on my demo that you could act on now if you wish, or later today or tomorrow. We'll look at all kinds of ideas. And you know, in general, there are a couple types of technical analysis: manual methods, which means drawing your own lines on the charts, creating your own price levels with the tools. That's what I tend to lean on in the webinars. The other type of technical analysis is making use of indicators, which there's no reason you can't do both as well. And the only thing about indicators, they'll throw signals in both directions. And the fundamental news, you got to understand, determines which signals are going to be right with those indicators and which ones are going to be false signals. So you've got to use indicators, understanding that typically, especially on days like today, they're only going to throw proper signals in the right direction, in the direction of the huge momentum typically, and they have a hard time being right in the opposite direction with this type of momentum. An example would be, it might be telling you the Australian JPY is oversold and hey, it should come up, and yet it kept dropping all day. So, you know, indicators in that circumstance can be very misleading. So I tend to only use indicators after developing the manual entry points, and then use indicators to help you in the direction you prefer when maybe the right time is based on the indicator. Okay, with that said, if you have any questions as we go along, please ask. If you want to input anything that I'm not covering or that you think I missed, please share it. I certainly don't hit on everything, and sometimes I can miss something as well. So please add as well. It helps everybody who's at the webinar. Okay, so let's quickly look at the fundamentals, and then we'll get into the technicals. And I think it's easy. Dow briefly falls over 1,000 points. Wow, what a drop. And it was fully expected. We could see it over the weekend. We knew our futures trading gapped as soon as the markets opened on the indices, they gapped down. It was fully expected. If you had positions in before the weekend opened, because you could see all the fear on the markets, then it was easy to watch the weekend and know, hey, this is going my way for sure, because all the countries just started loading on more and more about the virus spreading from one country to the next, more infections, more deaths, and the fear rose right through the weekend. Now, if you didn't get your trades in before the weekend, then it's too late until the market opens, and then it already gapped, right? Then you might feel you're getting in late, but I'll show you how you can see that you actually weren't. And even after the gap, after the market opened, I'll show you how you still can find entry points, and you could have profited right through the whole day today. On the indices dropping, on gold rising, on oil dropping, everything that would be expected with this type of market fear. And I'll show you a number here. The VIX index, when you see everything is red except this, the VIX index, you know there's something major going on in the markets, okay, fundamentally. That's really all I need to look at. My fundamental analysis could be over with this headline and seeing everything's red, meaning dropping, except the VIX index. What is the VIX index? For those of you that have come to the webinars before or might be familiar with it, what's it measuring? Why is that up when everything else is dropping? Stocks are dropping, indices are dropping. The only thing up is gold and the VIX index pretty much. Why? What is this VIX index? Why is that index going up when the others are dropping? It's measuring what? Yeah, exactly. Volatility, fear. One of the nicknames is the fear index, okay? It measures fear or volatility on the market. So this is rising. What do you think happened to gold today? You know, if and this is up, the VIX index is up nearly 50% just today. You don't see that very often. You know, this type of potential pandemic, this is a once in a generation or once in 10-year type of event. This is a huge thing that had predictable movement all day. When you see a number like this, 50% almost rise in the volatility index, and everything's red from the futures to the open of the US market. Very predictable. And now let's look at the technical analysis to see how we could have traded on it. And you see, it doesn't matter. I'm looking at investing.com here. I'm looking at Reuters here. Same headlines. Fear, 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 every headline. And look at this, rate futures. Why is the US dollar weakening? They're saying it's more likely now that the Fed in the US will lower interest rates potentially because of all of this. What happens when governments lower interest rates to the currency strength? Typically drops. So that's why the US dollar index took a drop today as well. Okay. So very predictable what's happening here. Easy to trade on. And why is the yen strengthening? Headline, yen jumps against dollar. Dollar's dropping, US dollar's dropping because people anticipate they'll lower interest rates now because of this. Why is the yen going up? What do they call the yen? Just like gold, it's a safe haven. It's a safe haven currency. Usually currencies aren't safe havens, but if you're going to go with the currency, the yen tends to be the safe haven currency. So it tends to strengthen when gold is strengthening. Okay. Before we look, why would the Australian dollar be weak today? Who does Australia sell their number one exports to? Australia is a huge export nation. China. China's their big buyer. So of any currency, Australia against the yen, weak horse against the strong horse. The fundamentals tell us right away. We don't even need to look at the chart. We know what they're doing. Okay. And I know what you could have done all day long with making profits. So now let's go ahead. And these articles were out way earlier today. It's not like they just came out now. You could have been trading on these movements all day. Okay. So the fundamental analysis is done. Let's go to the chart and look at the technicals and how you could have found entry points. And yes, this is real. These are not make-believe movements. This is gold today, gapped up and just kept running. Let me draw the lines. Okay. This is what I was talking about. Even if you missed the movement, you didn't get in Friday. Here's Friday's close. These are 1 hour candles. The market closed on Friday here. It opened with a big gap up. So that was instant profit if you had opened buy positions before the close of the market. If you had sell positions, boom, that was quite a loss. Okay, gapped up. But you know, it depends. If you were banking on a small pullback, I actually had a position in for a small pullback before the weekend because I saw some news out of China just before the markets closed that they were getting a handle on things in China, which is true. They seem to be containing things well in China, but then all the news started breaking on Friday night and Saturday that Iran, Italy, all these other countries had big outbreaks then coming, and that just pushed the fear factor way up. So that's why you always should limit your risk to what's sensible on any one move, right? And then even if you were wrong going into the weekend, look at all the opportunity after you saw the news through the weekend. It wasn't too late. It went here, it opened. Usually when it gaps and you have a huge momentum, it pulls back some. Then you wait for the support level to form. Support, support, support. And then now it's time to go with the direction of the gap and what the fundamental news is telling you. So the technicals showed you gap up on gold. Momentum, pullback, as happens many times. Support level forms, and there's your support level. Then you had 1, 2, 3, 4, 5, 6 hours to find that support and see it. And then you're going with the momentum of the fundamental news off a nice support level, technically speaking, in an uptrend. Okay, made all the sense in the world to trade up from here. And there it went. You could still be riding it up, or you could have already closed. Obviously, once this first momentum slowed and started to go sideways. So that's a definite technical strategy going in the direction of the gap. Now we look at crude oil. These are 15-minute candles. So this has been dropping all day. 15-minute candles. If we go and expand this, there's the gap at open. Okay. So it gapped down from Friday's close to today's open. There's the gap down, technically speaking. This confirms the momentum, right? You see all the news over the weekend. You know, wow, Very bad news for the economy, maybe. What happens to oil price when the economy is bad? When there's fear about economic doom and gloom across the globe, what happens to oil prices typically? They tend to drop, right? Uh, Imran, you're saying, should gold go back and fill the gap? Let's go back to the gold chart and talk about that. Okay, here's gold. Okay, did it ever re-enter the gap? This is the rule technical traders tend to follow on the fill the gap strategy. Number one, because the news was so severe today, coming through the weekend, I mean, it's a once in a lifetime or once in a generation type pandemic potentially. You might not expect the gap to fill with news like this. Okay, it's not your usual situation. But even with that, if you wanted to think about trading, fill the gap. Here's the location that it gapped up to. The rule is it needs to break into the gap before you'd start trading it. That's the typical rule. Start a downtrend, start to refill the gap, then you get in. It never looked back. It never entered the gap. It went to a new high point. So once you saw the resistance here, resistance, you say, okay, if it breaks to a new high point, I'm in. Here's the breakthrough candle on this resistance here. Here's the initial climb, normal pullback, support, support, support. Once it broke up off the support, or if it broke this resistance and you want to be more patient, you're in. And there's your climb. Okay? It never confirmed re-entering the gap. So even if you were planning to trade it, you didn't get the technical analysis entry point to trade it. You could have had your pending order right down here into the gap. What, by the way, what kind of pending order would have been waiting here in case it did go to refill the gap? What would sell from a lower point? What kind of pending order could we have set up just in case it started to fill the gap and come back down? It would have sold automatically as a sell stop. Yeah, sell stop. Good, Sharon. And to set that up, it's easy. You could have went to market execution, switched to pending. There's your pending order. Here's your pending order type. Sell stop. You program it once the movement was up here. You program it to sell from a lower price with a sell stop. You put the at price here. It would still be sitting there. It never would have opened. It never retraced into the gap, so you wouldn't have lost anything on it. It just never got triggered. And today I wouldn't have expected it to. I would have been waiting for this support level to form, support, 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 and then been ready to trade up off that little support. Easy move with the momentum and the type of news that we're looking at here with a potential global pandemic, okay? And so there was the predictable move. And okay, so you'd say, okay, that's all well and good. What about right now? Well, what do we see right now? We see old resistance level, resistance, breakthrough level here, breakthrough. It pulled back. Where did it stop dropping? Right on that resistance level, support, 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 and up it goes again. Okay, so if you're going with the fundamental news, you could play this bounce off this support level here, and the first resistance level is here, up around 1687 or so, 1688. Okay, so it's already bouncing off this support. If we go in 5-minute candles, there's the bounce, here's the support, right? Support, 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 breakthrough up. Okay, it just now, as we've been talking, broke this resistance here, resistance, and it just broke through. Okay, the major high point today was up here. My question is this: has the news changed yet? Did the pandemic die? Is it over? The answer is no. Are any countries reporting good news that hey, our cases are dropping, other than China, which was already doing that last week, and it didn't help quell the fear. So China saying their cases are dropping is nothing new, right? But all of the other countries involved are saying what? More cases, rising, more deaths, faster spreading. So all of that is still there, fundamentally speaking. So if you're getting technical breakthroughs off of small candle resistance. And in the bigger picture, you see a support level that was a resistance level here, support level now, and resistance level up. Technically speaking and fundamentally, the move is a buy here, right? Now, as we started the webinar, is there a guarantee you'll be right? Of course not. Am I telling you, hey, buy on this? I'm not. This is your decision, right? But this is trading. Going with what you think the technicals show you, maybe trying to go in the direction of the fundamental news, and trying to have maybe better potential profit than what you're risking many times. And so you don't have to risk as much to get below this support level as the potential profit if it goes up. And when you're going with the fundamental news, you're not going to be right every time, right? But with the right technical entry points, you should be right more than you're wrong. So should you put everything in your account to buy on gold right now because it's above a support level and it's showing on the 5-minute candles an uptrend? No, I personally wouldn't risk a huge portion of my account on the one move, right? But percentage-wise, I feel better about it than I do selling and having it break the support. Because in my mind, with the type of news that's there today, why should it break the support? Okay, so that's the situation on gold. Easy move after the open today to be in on what you could have already profited on. Certainly, there could be a pullback further. I'm not saying there can't be. What kind of pending order can you put? Because again, you don't have to try and guess the market. You see, technically speaking, you see a bounce off the support level, follow your technical rules. Trade up, put your stop loss below the support in case it reverses and breaks. If it breaks the support, what kind of pending order can you have waiting at the same time to sell? If it breaks the support, you can sell until it comes back then to where it gapped up from right here, because that's the next support level. So you could have done a market buy with limited risk. And if you were wrong, what kind of pending order sell stop? Exactly. We could have a sell stop waiting for us. You don't have to guess the market. That's where a lot of traders go wrong. You don't have to think my first move has to be right. It certainly could be right. It might be wrong. Be prepared with step 2, because really in the end, it's chess, right? Step 1. And if that goes wrong, you already know what step 2 and your 3rd step and your 4th step will be. Limited risk. Proper entry points, technically speaking. Waiting for breakthroughs, waiting for bounces off supports, going in the direction you think the fundamental news says it should, but all the while being prepared for the unexpected headline that could break that you didn't know was coming. Couldn't there be a headline that breaks right now that says China shows 50% drop in new cases and then that causes gold to drop temporarily? Could happen any moment. So go with what you know now for your current moves. Prepare for what you don't know could happen in terms of breaking news with your pending orders. Back yourself up, okay? Because while we all can understand what the news shows now, we don't know for sure what the news might be an hour from now, especially with this type of moving, fluid environment, okay? And the higher gold goes, the more likely it is eventually to pull back no matter what the news is. Eventually, it'll reach a price level that all the buyers start selling, even if the news doesn't change. So you always back yourself up with a risk management plan, either stop loss on your moves or a hedge position down below in the opposite direction. In this case, if you had taken a market buy, then your hedge position would be the sell stop example down here. If you wanted to keep the buy open but ride the wave down until it bounces up, you can temporarily cover yourself with a sell stop and keep the buy position open in case it comes back up. Okay, these are ways to handle things without having to put a stop loss on the move maybe you believe in more, if you believe in up more than down at this point. Okay, and you certainly can believe that it'll pull back more than you think it'll go up. So in that case, then you'd be selling, and your backup would be a buy stop in the opposite direction on the way up. Okay. If anyone wants a better explanation or a more inclusive explanation of hedging, let me know. In general, if you have a market move that you believe in more long-term, you can back that up with a pending order in the opposite direction for the same size or part of the size to either fully hedge or partially hedge in case it goes the wrong way. And the hedge position, you put a stop loss on for when it comes back the right way for your initial move that you believe in more. And in that way, you don't have to put a stop loss on the initial position, because we've all had moves where we believe in the long term in one direction. It comes down, hits your stop loss, then goes the way you thought it would. And you're not in on it because it hit your stop loss. So the hedge position allows you to hold that position without further risk until it goes the right way. And the hedge position is the one with the stop loss to close once it goes back up the right way. It's a concept that can work very well if you set it up the right way. So you might believe in all the world in a buy here, but you have yourself backed up with a hedge on a sell stop, and the sell stop then could have the stop loss if it breaks back above the support that it potentially could break. Then it closes the sell, and there you are in on the buy again. Okay. Any questions on that? Let me know. So what do we know oil probably did? Dropped, right? There it is. Very easy. It gapped down, and we started to talk about it, and then I got pulled back to the gold chart. No problem. Here's the gap down. Here we see it never re-entered the gap. So if you were trying to trade the fill the gap strategy, which is fine, could have had a pending after you saw it gap down. You could have had a pending buy stop above the gap, waiting for it to refill. And because a lot of times once it enters the gap, it keeps going back up to the prior day's close. It never did. It formed a support level here. Support, support. And then once it broke that support, your sell stop would have entered here. Okay. Sell stop below in the direction of the gap, below the initial support. Once it breaks it, momentum down. Exactly the same as gold, but in the opposite direction. Eniton, you're asking what news triggered the fall of oil? The same news that triggered the rise of gold. This coronavirus, fear of a global pandemic. What do you think happens to the demand for oil when China, put 50 million people in quarantine, and a huge percentage of their businesses, small and large, were shut down for weeks now? What happens to the demand for oil as other countries start to do that, because it's spreading to other countries now? What if major countries all around the world shut down all their stores because they don't want the virus to spread? They don't want employees traveling around to and from work. What happens to the demand for oil if people aren't driving to work, if airplanes aren't flying? The demand goes down, right? And so people are anticipating a decrease in demand for oil, for gasoline. What happens then to price if demand goes down? Tends to drop. That's why this gap down, and that's why it continued to run down. Okay. Now the question is, if you didn't trade on this strategy today, if you didn't see the gap and the support and have your sell stop down here and ride, once it broke that support, you're in and look at the profit. What about now? What can you do now? Well, let's look. 4-hour candles. Where's the next support level? Not until down here, right? The next support on the 4-hour candles is at about 50. Where's the price now? 50.73. So fundamentals says this probably will keep dropping. Technicals say the next support level is around 50. We see the price. Sure, temporarily this is pulling back, but everything tells us this probably is going to push down towards 50. Again, no guarantee, right? But if you're going with the fundamental news and the technical analysis, this looks like something that broke this support level already right here. Here was the support around 51, support, it broke it. Now it's pulling back up towards this, what should be resistance. So the technical and the fundamental move now is to sell on oil. Could it be wrong? Absolutely. But it's not about knowing you're going to be right. It's about having a strategy, doing what the technicals and fundamentals tell you, getting proper entry points, and hopefully you're right more than you're wrong, right? What's the risk have to be? Only to this side of the support. If it breaks back above this resistance now, here was the support. That should be resistance now. If it breaks back above, there's your stop loss. Fine, I'm out. Small risk. If it does what we expect based on the fundamentals and the technicals, it should drop 4 times, 3 times that distance. Okay, risking what? 25 cents to make 70 cents profit. 3-to-1 risk to profit potential, right? That's in the short term. That's if you're scalping, right? What about 1-day candles? What about the bigger move? Let's go to 1-week candles. This is the first support we're talking about, dropping from where it is towards 50. What if it breaks there? What kind of pending order can we have below 50? If it breaks 50, where's the next support level? Here's the 1-week candles. Okay. Support. There is no support between where it is now, other than this one at 50. Here's the scalp move down to 50. If it breaks 50, where's the next support? All the way down about 43, folks. The next support, we don't see it until the 1-week candles, and that's all the way down to 43. What kind of profit do you make if you have a 1-lot position and you have an entry with a sell stop just below 50? If it breaks 50, technically speaking, there's no support to stop it until it gets to 43. No guarantee it'll drop all the way there, right? But we're talking about technical trading here, technical analysis. The next support level isn't until 43. If you get in at, let's say, 49, it breaks the support at 50, your sell stop is triggered at 49. That's about $6 drop to the next support level. A 1-lot position would pay you $6,000 on that move, on that one move. 1,000 barrels in a 1-lot position, you're making $1,000 for every dollar drop. Now you have to take the trade size that's right for your account, right? And your goals. A tenth of a lot position would pay $600 with this entry point here and the profit mark just above that next support level. Okay. The question is, do you think gold will drop for that long? I'm sorry. Do you think oil will drop for that long? What do you think is going to happen to China's economy? What have the economists been saying? This effect from this virus, even though they've contained it now, how long did they say the effect probably at minimum will last on their economy? What did they say about the potential effect on China's economy? That once they contain it, the effect on their economy is done? Or what have the articles and the headlines been saying? That it could last at least for the first quarter. We're talking all the way through March then, potentially. If we keep seeing negative factory numbers, negative output numbers, negative GDP numbers for the next month, what do you think oil does with this little support level here at 50? And I'm not here to tell you what to think. I'm just pointing it out to you. So this is what people are thinking now, that this effect, and frankly, it's not just going to be an effect on China's economy. Look what's happening in European nations, Middle East nations. This virus has spread. Okay, so listen to the fundamentals. Go by technicals for entry points. There's a support level at 50. Sell stop gets in. If it breaks, you don't have to risk much to get back above 50 with your risk. If you're right, you could make a heck of a lot more than you had to risk to your stop loss. Okay, so these are just ideas. There's no guarantee those movements will come to fruition. But again, I keep pointing out, trading is not about guarantees. It's about potential. And it's about being right, hopefully more than you're wrong. But even if you're right, 50% of the time, you can still profit when the potential profit is much larger than what you're risking. In that case, you could be right only 40% of the time, right? And still profit. Because the payout here, if it breaks the support and goes to the next support, is much bigger than even if you were wrong once, twice, 3 times, and right once. You're still going to profit. Okay, this is the idea, being patient. Don't try and be right on every move. Don't try and necessarily make 50% on your account in a single day or a single week. Be patient. Use the technical analysis for the proper entry points. Wait for your spot. Use your risk management And this is where I've seen that 30% of traders that without a trader, 30% or so that are profiting long term, that's how they do it. Patience, proper technical entry points, and pay attention to the fundamental news. On the MetaTrader 4 app, placing the pending orders is the same. You'll find it in the order window. You can change from market execution to pending. Okay, you can do it in the app as well, and you have the same 4 types of pending orders. The limit orders are reversals. Buy limit means if it goes down, then you think it'll go up. So you're buying from a lower price. Sell limit, you think if it goes up, it'll come back down. So the limit orders are reversals. The stop orders are continuation, meaning if it goes up, you think it'll keep going up. Or if it goes down, you think it'll keep going down. Okay. Where can you read the fundamental news? We looked at some examples today, Albert. Any popular news website will do. Investing.com, Bloomberg, Reuters, you name it. Okay. I always do a quick check on fundamental. Just before I'm going to do a trading session, I do a quick fundamental check. Then I go in and do the technicals just like we did. Now I'm ready. Either to be patient, set pending orders for spots I want, or if I happen to catch the movement in the spot for the direction I want based on the fundamental news I just looked at, then I can do a market move. Okay, so my trading is a combination of market moves or pending orders or both. As we suggested, backing yourself up, even if you think you're right with the market move, you can back yourself up with the pending order because the news can change at any time. Albert, to put the pending order, you're picking the type and then the at price, let's go pending order, type of pending order. Let's say sell stop. Let's say with oil, you think if it breaks below 50, then it'll keep dropping. Let's use that as an example. So I do sell stop for oil, saying if it drops to a certain point, then I want to sell. Why would I want to sell from a lower point? Because I'm waiting for confirmation of the broken support to confirm my downtrend. Okay, so support levels at 50. If it breaks that, the next support level isn't until about 43. So I say at price 49.00. If it breaks 50 by a full dollar, then I'm convinced maybe that it's going to keep dropping. Must have been big momentum if it broke that support. That's the idea in my mind. Okay, as an example, I'm not saying that should be your idea. That's my idea. We put that as an example of what you might do with a pending order. Then I say, okay, my stop loss. You don't have to put a stop loss, but let's say you want to. Should be back above someplace that entry point. And what makes sense technically speaking is if it broke the support at 50, then my stop loss would be back above it, saying that I don't think it should go back up if the momentum down is so strong. So then I say, okay, my stop loss would be if I enter at 49, my stop loss is back above 50, maybe at 50.50. Okay, and where's my take profit? Maybe somewhere near the next support level. Maybe I say 44 and a half. You don't necessarily have to wait till it gets all the way to that big support. So that's up to each individual trader. Some halfway down to the support might do a partial close half of it. If it goes a little further, close a little more of it. You don't have to close the whole trade. So take profit, I could say, okay, 43.5. You could pick your spot. Okay, there's my pending order. Now I don't have to watch it. If it breaks the support at 50 and hits 49, I'm in on a sell. That's my sell stop. It's waiting for me. Okay, if it never breaks the support, then I don't enter. That's an example of how to do that. Any questions on that? Okay, so again, you also could be doing a scalp move right now with a market sell until it hits 50, if you think it'll push down to 50. Okay, so there's a market move potential there if you're bearish, if you believe oil should drop, and there's a pending order potential if it breaks the support as well. All right. Yeah, Albert, demos are great. If you're not confident, demos are perfect. Practice your strategies. We want you to be confident before you trade. And you certainly shouldn't make a move because I or anyone else thinks, oh, the direction will go one way or another. You should do it because you understand what you're looking at and you believe that. Okay. All right. So let's take a look then at Australia JPY. And the yen's been strengthening all day. Why? Because it's a safe haven currency. Why would I choose to pair it against the yen? Or I'm sorry, against the Australian dollar? If I think the yen should be strengthening, then that's the strong horse. Yen as a safe haven. When there's fear on the markets, yen tends to strengthen. Why would I pair it against the Australian? Because it's the weak horse. Australia should be weakening if there's bad news out of China, right? So that's how you can strategically decide what pairing do I want. Why would I not pair the USD against the Australian if I'm trying to go against the Australian? Well, because the USD was weakening today with thoughts that maybe the lower interest rates. That's what the one headline shows. Let's go and look. Right here, rate futures surge as coronavirus seen pushing Fed to ease. They're talking about ease interest rates. Okay, lower interest rates potentially. So if there's reason for the US dollar to weaken, we saw the dollar index was dropping, then why would I pair the Australian against the USD if I'm going against the Australian? I should pair it against something I think should strengthen, like the yen. Okay, and let's take a look at the chart and see what would have happened if we paired the Australian and the yen. Very easy move today. I have a lot of clients that were profiting on this. Australian yen. Okay, these are, let's go to 5-minute candles. This was all day. Let's go to 30-minute candles. We see the gap. Okay, here's an example of it entered the gap. Okay, immediately. Here's the gap down at open today. What did it do? It gapped right back up. Let's make sure we're looking at the right date. Yeah, 21st to the 23rd, which was last night. Australian gap down. Expected. Bad news out of China. Australian gaps down. Yen is strengthening because of global fear. Makes sense. It gapped down. Immediately, did it go into a downtrend or did it start to fill the gap? In this example, unlike gold and oil, who did not re-enter the gap, what did the Australian do? It immediately, here's the price that it opened. It gapped down. What did the second 5-minute candle or 30-minute candle, boom, re-entered the gap. So what's the rule say? If it re-enters the gap after the gap, you can trade to fill the gap. And look what happened. This is the only one out of the three we looked at that re-entered the gap. And what happened? It filled the entire gap. The other two didn't re-enter the gap and went right into a downtrend. Those kept dropping immediately. Very simple strategy. It doesn't work every time, but we're randomly looking at assets here that are related to today's news, and we can see the strategy has worked on all three. We knew when not to trade to fill the gap because it never re-entered on oil and gold. We knew when to trade to fill the gap. This one re-entered, and there it went. And predictably, where did it stop rising? Where did the Australian stop rising? Right at Friday's close. Okay, as soon as it filled the gap, the strategy then says trade down. So what kind of pending order? First, it re-enters the gap and your buy stop pending order triggers. You're in, you take profit at Friday's close because then it filled the gap. What kind of pending order then could you have had waiting at Friday's close to sell? Once it filled the gap, sell limit. So once it filled the gap completely, it hits your sell limit. And I'm not saying your sell limit has to be exactly at that price. It makes sense to get in a little below it because sometimes it doesn't completely fill the gap and you might miss the movement. But in this case, why would you be in a hurry to sell from this price once it filled the gap? Because the news was tremendous for the yen to strengthen today. The fear factor was huge. Of course, the yen should strengthen today. And there's all the reason in the world for the Australian to weaken. So This was an easy move. And all you, 2 pending orders. Soon as you saw the gap go down, pending buy stop to, if it re-enters the gap, a pending sell limit at the same time in case it fills the gap all the way up, and go to bed. Go do something else. Pending buy stop, pending sell stop. In this case, it triggered the buy stop, profit. It triggers the sell limit, profit. And what kind of pending order do you have ready in case it breaks back below the gap? It gapped to here, right? Here's the gap. As soon as it broke back below the gap, what happened? It went down. It plunged down further, okay? It broke the gap here, tested it, and plunged. Very easy move. Sell stop again. With your stop loss, as soon as it broke below the gap price here, sell stop triggered here, stop loss up enough to avoid false signals, and down it went further. Okay, very simple. Okay, Euro USD, and this is an interesting one. Olakuni, you're asking Euro USD. Let's take a look at it. And there's a couple reasons why Euro USD is interesting today. And somehow I have my market watch disappear. Let me go to view. There's my market watch. Okay, so Euro USD. Why did this happen today? Look at this. Okay. Why did the euro initially gap down and then up it went? The article about the Fed maybe leaning towards lowering interest rates in the US is what triggered the US dollar to weaken. Okay? The US dollar was triggered by that article, by that concept that they are more likely now maybe to lower interest rates in the US because of this coronavirus. And very easy. Let's look. Economic calendar here. Look at the announcements out of the European Union today, specifically Germany, which is the largest economy now in the European Union, right? Look, high level announcement, 3 bullheads, better than expected. 2 mid-level announcements, better than expected, better than expected. So we had a reason for the US dollar to weaken. Here's the dollar index dropping. You see it right there. You see the announcements come in, and this was, 4 in the morning, New York time, so 9 a.m. Okay, 9 a.m. GMT time. You see these numbers come in, and you see the dollar index dropping. So if we go back to 9 a.m. on the chart, 9 a.m. is, let's find it. These are 15-minute candles. That's way back here. Okay, here's 9 a.m. right here. 9 a.m. we saw the support. Support, support, support. Yes, it gapped down, and yes, it kept dropping. So you could have traded on the gap down. First of all, it filled the gap. So that was an easy win. It entered the gap and filled it. Same strategy. We're 4 for 4 now. Every asset we looked, it gapped down. It re-entered the gap here. If you had a buy stop, you profited. Sell stop off of the entry, the close price from Friday, you profited again on the way back down. Once we saw the support, you could add a sell stop here. It never would have been triggered. Okay. Then you see the announcements come out. Positive for the euro, for Germany, which affects the euro, and that's an easy move. Up you go. That's what triggered it. Right at the time of the announcements, around that time, the movement was down here and up you went. You could add a huge profit on the Euro USD. Okay, you must pay attention to what's upcoming on the economic calendar. This triggered the euro to make a run up. Plain and simple. US dollar index was weak. You could see it here. As soon as you saw these numbers come in at 9 a.m., let's find the time again on the chart. Okay, 9 a.m. was, let's find it, right about here. Okay, 9 a.m., the movement was here. So you could have saw the support level below and bought from this location. Or you could have said, I'll wait for a breakthrough. Here's the resistance. Here's your breakthrough candle. And you could have got in here with this breakthrough of the resistance. I wouldn't have been afraid to just go ahead and buy as soon as I saw those big numbers come in and the dollar index down. Okay. But either way, there were multiple entry points off the support. It tested the support again. So you could have got in up off the support, or you could have waited for the breakthrough on the resistance to get in. Either way, nice profit today on that. Any questions, comments? I think this is a good place to stop. We've been going for almost an hour. And please, anybody, if I'm ever going too fast, stop me. Tell me to go back. Ask questions, okay? I feel like everyone was with me on that, everything we covered. So in review, we looked at what you could have done through the day. Very easy moves based on fundamental and then technical entry points. And now we've looked at multiple opportunities still with pending orders and market moves that you can still do today. Ebert, what to do tomorrow? We looked at potential for oil. We looked at potential for gold, for moves even right now and moving into tomorrow. We looked at some buy stop opportunities, some market move opportunities already on gold, on oil, and the Australian dollar. I can show you as well real quick. Australian JPY, it obviously dropped. Let's go to 4-hour candles. It's on a support level right now. Support. If it breaks this support level, you can have a sell stop ready to go. The next support level isn't until right here. Okay, right here on the 4-hour candles. That is a potential profit on a sell stop entry down here from 72, let's say 95, all the way down to 72.35 or 72.40 before the next support level. So you're talking easily 40 pip potential profit if it breaks the current support and you ride it down potentially to the next support level. That's a scalp move, and it's a huge scalp move that could happen quickly. Okay, if you think there's going to be a pullback, you could trade up off this support, right? I don't see much reason to trade up off the support, but if you want to go for it, it's a minimal risk to put your stop loss below the support, and you still can have a pending sell stop in case it breaks. You can play both directions. There are people who trade only technical. They don't care what the news is. The news creates the technical movements, is the theory. So you can trade up off this support, minimal risk with a stop loss below the support, and at the same time have your sell stop ready to go down here. Now, I prefer to only go in the direction that the fundamental news tells me, and then find the technical entries. But everybody's different, right? There certainly is huge potential. If this breaks to drop, you could take a shot at a bounce off the support. Not my preference, but it could be yours. So we've got opportunities on the Australian. We've got opportunities on oil and on gold with huge potential movements coming. Okay. All right. Good questions. Thank you for the participation. It helps when we've got good questions and input. Go for it here, guys. This doesn't happen very often with this type of news. A global pandemic, potentially. We could see huge breakthroughs and bounces again, still through the rest of the day today and into tomorrow. So go after it while it's there, guys. Guys and girls, I should say. And we'll be doing another webinar through the week. You'll see a webinar tomorrow, Wednesday. We've got a chief analyst at the company is hired that's also doing webinars on Wednesdays. So keep your eye on the news and the charts, and you're welcome to attend any and all webinars, okay? All right, bye for now. Good luck with the trading.